Now, even though in the current investing environment in 2025, there's so many different stocks and of course my favorite dividend paying ETFs that offer different strategies that investors can buy into and potentially have exposure to massive growth potential, or of course one of my favorites, have exposure to massive income potential, there still are some potentially even better, set in stone, almost guaranteed methods to get rich long term if you stay the course and invest consistently. Now, don't get me wrong, in my portfolio, as you can see right here, I also invest in tons of different of these ETFs, some of them that offer sort of wacky strategies that might offer investors, like I said, a ton of income potential or even a ton of growth potential, or whatever the case might be. But in this video, we're going to take it right back to the basics, and I'm going to share with you guys, especially if you're newer to dividend growth investing, I'm going to share with you what it would look like if an investor just stayed the course and invested consistently, year after year, reinvest those dividends into a super high quality dividend growth ETF like SCHD, for example, a dividend growth ETF that I currently own over 2,300 shares of. We're going to go over exactly why this is the case and why, in my opinion, this is almost a guaranteed way long term to become very rich and wealthy later on. So if you're a dividend investor, especially if you're someone newer at this whole thing, then make sure to stick around until the end, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now again, this video is going to be somewhat beginner friendly, but stay tuned until the end because we're going to be going over some numbers that might shock all of you guys. So first things first, heading over to the Schwab US Dividend Equity ETF's facts page. This is exactly where we can see the investment objective, some of the ETF's highlights, and really understand why SCHD has performed so well historically and see what it has to offer. So it says right here, first off, the investment objective, the fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Now again, every ETF out there is going to have somewhat of a different investment objective, and some of them are going to be a little bit riskier than others, but at least in my opinion, the objective of SCHD is sort of sure proof, and just because it's very hard for individual stocks to either become a part of or even enter this ETF to begin with. Now, because this ETF invests in stocks selected for fundamental strength relative to their peers based on financial ratios, and several of those, again, it's going to be somewhat of a challenge for individual names to become a part of this ETF, which means this ETF's construction alone is sort of a sleep all night method. Now, other fund highlights, it says it's straightforward and low cost, and considering this ETF just costs 0.06%, that's 100% correct. It says the fund can serve as part of the core or complement in a diversified portfolio. It tracks an index focused on quality and sustainability of dividends. So again, if that's something that you're interested into, which I definitely am, that's going to be another selling point. And then again, it invests in certain stocks that have to make it through multiple different ratios. Now, the AUM in SCHD is almost 66 billion, which makes it one of the largest ETFs across the entire market. There's around 100 different holdings more or less at any given time in this ETF, so it is pretty well diversified right from day one. And of course, it pays out a dividend every single quarter. Now, since inception, SCHD's returns have been around 12.92% year after year if you average it out, which is an outstanding return, especially because most years have been very, very consistent. Now, just because this ETF has offered 10% to 12% returns every single year, more or less, doesn't mean that it's going to continue to do so. But again, just looking at what this ETF has been able to do historically, during multiple different market conditions, gives you at least an idea. Now again, that brings me sort of back into the title of this video. The fact that this ETF over time has been very consistent, it's grown up into the right year after year after year. It's also paid more and more in dividend income year after year after year. It sort of gives an investor at least the idea, theoretically speaking, that it's a quote unquote guaranteed way to get rich, at least long term. Now again, anything can happen. This ETF could go to zero. Any stock or ETF for that matter could in fact go to zero. But again, just based off of historical performance, this ETF offering a 12%, 13% year after year return to investors, especially if you compound that could turn even a relatively small portfolio into a massive one, which I'm going to share with you here in a second. Now, the majority of this ETF is based in things like financials, based in things like healthcare, consumer staples, industrials, energy, consumer discretionary, and then a smaller portion of the portfolio is made up of different stocks in information technology, communication services, materials, and utilities. Now, I think this is also important to mention because a lot of the names in SCHD and a lot of the sectors are sort of boring, less flashy names than you're going to see in things like the S&P 500 per se, but these names for the most part, at least over the last 13 or so years that SCHD has been trading, have done quite well and offered consistent, high quality returns that's more than enough for investors to get rich off of. Now, like I mentioned, anything can happen. SCHD is not necessarily going to continue to trade the way that it has historically, but just based off of the last 13 or so years, what do you see the price do over time? It's been trending up and to the right consistently with a few dips and valleys, but over time, every few years at least, this ETF keeps trading higher and higher for investors. Now that's only one part of the equation though. SCHD has also been paying investors more and more in dividends year after year for the most part, which means that especially if you're buying this as a long-term investment and then reinvesting those dividends along the way into more shares of SCHD, you can compound your portfolio that much faster because if you're getting paid dividends, reinvesting those dividends year after year, and then getting paid more and more dividends, that's when the real compounding can happen. So the fact that SCHD has grown over time consistently as far as price return goes, it's paid more and more in dividends year after year since inception, and the fact that the portfolio makeup is made up of different individual stocks that have been paying dividends consistently and raising dividends, along with the fact that the methodology that this ETF tracks is very robust and extensive. This ETF for me is an ETF that I'm going to be using and have been using to build a massive position over time, and in my opinion is going to be one of the most guaranteed ways across the markets. Again, there's other high probability ways, but just based off of historical performance at least, this ETF is a compounding machine. Now to share with you some of the numbers, a $50,000 portfolio, for example, with $12,000 contributed per year, invest it into SCHD, which offers around 3.5% annual dividend yield, around a 10% increase, 6% share price appreciation over 30 years. An insane amount of compounding could potentially take place just based off those numbers at least. And over 30 years, a $50,000 portfolio based off those numbers would turn into $4.2+ million. Now, before you say, well, we don't know exactly if the dividend is going to be increased consistently year after year, or we don't know if there's going to be a dividend cut or an annual share price appreciation decrease. Again, all those things are 100% true. But just based off of the previous 12, 13 or so years, when it comes to what SCHD has done historically, a relatively small amount of money invested over time can turn into a boatload of capital later on. Now, like I said sort of during the intro of this video, I'm not only invested into SCHD. Like you see right here, I have around 50 different holdings within my long-term portfolio. Some of the names offering a boatload of growth, some of the names offering a boatload of income, or everything else in between. So I am by no means saying that SCHD is the only ETF to buy into to build massive wealth later on, but I do think that it's a quote-unquote guaranteed way to turn a small amount of money into a massive amount of money, again, just based off of previous performance, which of course does not indicate future performance. So now that we talked about one of the best dividend growth ETFs across the entire market, in my opinion, SCHD, and I share with you guys why it could potentially be a guaranteed way to turn a small portfolio into a massive one long term. I lastly, most importantly, want to hear from you down below. Which ETF are you currently buying into consistently, just like I am with SCHD, to build a small portfolio into a massive one later on? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.